So I'll jump in here with our presentation. I just got to switch this to this different monitor. Let's see. All right, there we go. So you guys should be able to see my PowerPoint. Let's see. Can you guys say yes that you're able to see it? And I'll just know that we're all good. Okay, so let's see. All right, there we go. So I'll jump right in here. What we're going to talk about today are momentum day trading strategies. So just to give you a little bit of background about myself, for me, when I was learning how to trade, my goal was to try to generate relatively consistent income from the market, which is a very ambitious thing because the market is not consistent. I mean, yes, over the long term, when you look at the big picture, the market has certainly done very well and has gone up. But to generate consistent profits day after day is really not something that's very easy to achieve. And when people think about consistent profits from the market, they're usually thinking about 4 to 6, maybe 8% a year. They're not talking about making 100% in a year. But that's actually exactly what I needed to do because I had a $25,000 day trading account, like I'm sure many of you have, and I wanted to find a way to leverage that money to generate about $1,000 a week. Now that's $52,000, right? So that's a really that's a big target to try to double your account every single year, and it's certainly something that I struggled with as a beginner trader. My first few years were spent just simply struggling to generate any profits at all. Even $20 a day consistently felt nearly impossible. And what I realized was that in fact, making $20 a day is, that's the big hurdle, because once you're consistently generating profit, even if it is only $20 a day, the only difference between making 20 a day and making 40 a day, at a certain point is increasing position size, and that comes with confidence. But once you have a strategy that's consistently giving you a good percentage of success with a good profit-loss ratio, it's smooth sailing. The problem for me is that it took me almost 2 years before I found that. So the result of my early years as a trader was the development of a momentum day trading strategy. And the strategy we're going to talk about today is my gap and go strategy. Now, before we get into that, let's just make sure we all understand momentum trading. So momentum, what is this? A stock experiencing momentum is a stock that's generally moving up very quickly intraday. Now, a stock that moves up very quickly over the course of 4 or 5 days is also a momentum name, but I'm a day trader, so I focus primarily on the 5-minute charting time frame and on intraday moves. These momentum trades, you can see the strong trends going up, and then they usually peak out and you get a reversal. Now, we do have reversal trading strategies to try to capitalize on those kind of rubber band snapbacks, but today we're going to focus on just trading the momentum. And you can see this is a trade from just a couple weeks ago, actually about a month ago. On this day I made over $4,500 day trading the market, and what I was doing was looking for stocks that were moving up, trying to find safe entries so I could manage my risk, and then ride that momentum. This is a stock that literally in one day went from about $2 to $9.67. So that seems astronomical, but the reality is we see this kind of thing happen all the time, especially with the small caps. So one of the tricks for me was to learn what types of stocks would generate the biggest percentage movers, because for me to try to double my account each year, I wasn't going to be able to trade your Facebooks and Teslas and Caterpillar and stuff like that. I needed to trade stocks that could move 20 to 30% intraday, and that just inherently meant focusing on the stocks under $10. All right, so what we're going to talk about today, excuse me, is my favorite day trading strategy based on momentum, and this is the gap and go strategy. Now, as far as some of the people watching this may be a little over your head. So just be mindful of that. We're going to be talking about chart patterns, risk management, the type of stocks to trade, And these are things that we cover in detail, both in our day trading chat room at Warrior Trading, but also in our trading courses. So for someone that's brand new and is just hearing me for the first time, stay tuned, listen to everything I'm saying, and feel free to ask questions, and I'll try to fill in all of the details. All right, so today we're going to be focusing on learning how to find these stocks with that big home run potential. And a strategy really it's your trading plan. It's the way you approach the market. So a strategy is a certain type of stock that you trade, a certain time of day that you trade, a certain price range. There's a lot of different variables that go into developing a strategy. And just like starting any business, you need a plan. And being a self-employed day trader is running your own business. So your trading plan is going to govern how you operate and run your business on a day-to-day basis. Obviously, this is important because these are the strategies that I use every single day to generate profits from the market, and they're the same strategies that over 2,000 of our students are also using to generate profits. So the reason that we start with this strategy is because I think it's one of the easiest ones to learn, to understand, and it's an account building strategy. So even though I'm now years into my career as a trader and I have grown my account, I still trade the same strategy, and it's still scalable from a very small account to a slightly larger account. In fact, in March, I funded a $1,000 trading account just to see if how quickly I could grow it. And in 1 month, I made a 763% gain on that account, ending the month with about $8,600. Going to show that these strategies work very, very well for building a small account. And now this month in June, I started the month with a $40,000 trading account, and right now I'm up about $35,000 on the month, showing that these strategies work not only for building small accounts, but are also scalable to larger accounts. And that's the potential that the market offers for students that are able to fully understand the right stocks, the right entries, and capitalize on these opportunities when they present themselves. Okay, so the gap and go strategy, right? What we're doing is we're looking for stocks that are gapping up, and we want to ride that momentum. So I trade this strategy from the moment the bell rings at 9:30, typically until about 10 a.m. So it's only 30 minutes a day. The type of stocks that I trade are going to be lower float stocks, under 50 million shares. These are the stocks that have the potential to be the most volatile. These are the stocks that have the potential to go from $2 to $10 in one day. The requirements: the stock must have a catalyst or be a former runner. So this is to say that I only trade stocks, this is generally speaking, there are some exceptions, but for the most part I only trade stocks that are moving up on breaking news. That's really important because it's a catalyst that's going to drive the momentum. Momentum doesn't usually just happen for no reason at all. It's a reaction to something that's that's out there in the trading community. So some type of breaking news headline is usually all we need to get one of these stocks really up off the ground and running. Price range between $1.50 and $10. I don't really trade under $1.50. I actually prefer closer to $2 and $2.50. And I don't go above $10 for this strategy, although you can, but I typically don't. I focus on the account builder stocks. Again, these are the ones where we can potentially make 20 to 30% intraday, and on some days even more. All right, so here's a gap and go example. This is CDTI. This is a stock that was gapping up on news, consolidating pre-market. This gray area is our pre-market chart, and then right as soon as the bell rang, we squeezed from 250 all the way up to 340, representing, again, just a huge squeeze right out of the gates. Those three big green candles, some big profit potential in that type of move. So what makes the gap, right? A gap is when a stock is opening higher than it closed yesterday. And a gap is formed typically in response to news overnight. So when we have some type of fundamental news, whether it's earnings or maybe it's FDA announcements for biotech or clinical trial announcements, for a pharmaceutical company, some type of fundamental news is what's going to cause traders to start jumping into this name and force that gap higher. So I only apply this strategy to specific types of stocks, and I don't apply it to ETFs. So this week, of course, and last week, we had a lot of volatility in the overall market. And although that presented some opportunity to trade, VIX and gold and things like that, I generally avoid those types of gappers. Those are gappers moving on sympathy to an overall sector or in sympathy with the overall market, and those can be a little bit more difficult to trade than stocks squeezing on a standalone stock-specific catalyst. So my focus generally will be on a stock that has breaking news. Occasionally, I will trade a strong sector like solar or energy, but not usually when it's related to something that's going on with the overall market, the way we saw it today or this week. So the gap and go checklist, every single morning for me starts out pretty much the same way. I start scanning for the gappers, and I use Trade Ideas to do all my scanning. I absolutely love their platform. I love working with them. I've been able to customize a number of scanners to look for the exact type of stocks that I like to trade. Right? I have my little spot in the market where I really understand how these stocks work, and I can do really well there. So what I need to do is each day, out of the thousands of stocks that I could possibly, choose from, I need to hone in on that small handful that have the potential, that meet my criteria for being a home run potential stock. Right? So I've got these scanners. They search the market for those stocks that meet all of my these bullet points, all my criteria. I prioritize the low float stocks higher on my watch list because low float, the float, for those of you that don't know, that's the outstanding shares available to trade. So it's like a pool, and every single day we have that same pool that we can trade from. But here's the thing, a stock that has a very small pool of shares to trade from is going to move very, very fast when there's high demand. This is a supply and demand issue. So a company like Bank of America that has a float of 10 billion shares is going to take a lot of buying volume to result in a big move, whereas a stock that has, say, a 1 or 2 million share float, that's the type of stock that can move up 100% or 200% in one day. So I prioritize the low float stocks higher. I hunt for the catalyst. I just search on Benzinga. I use MarketWatch. I can ask people in our chat room. I can check on StockTwits. I figure out what the catalyst is. And then I do some of my pre-market analysis. I break down the daily chart, figure out where we've got support and resistance. Is this a good daily chart? Is it a bad daily chart? Where is our 200 moving average? Things like that. And then number 5, I prepare my order. So all I have to do is press the buy button when the market opens. And then at 9:30 when the bell rings, I'm ready to jump in. Now there are, again, there'll be stocks on my scanners that I'm going to ignore because maybe they have a big float, maybe they have too much volume, maybe the news, the catalyst, isn't something I want to trade. And these are all the intricacies that we can't all get into today, but these are things that you do have to consider before choosing which stock you're going to trade. Okay, so generally I'm going to look for stocks gapping up between 5 and 10%. Again, this is because I want to get in early on the move to ride it another 10, 15, 20%. So if a stock is already gapping up like 80%, I might take a trade because sometimes we'll end up having that mover that's 300 or 400, 500%. But I'm going to be a little bit more cautious because I want that gap that not everybody has already gotten into. I don't want them to be too crowded. I want to be early in the move because then I feel like I've got a really good position and a really good cost average to ride the momentum. When you get in high, it just always feels riskier. And that's true. A lot of people say buy low, sell high. But as a momentum trader, we buy high and we sell higher. So we look for stocks that are already moving, get in as early as we can, and ride that momentum. It's a little riskier, but you have the advantage of confirmation. When you buy low, you're simply buying a stock that's sold off. And there's thousands of stocks that have been selling off and are weak, but are not good buying opportunities because they show no indication of bouncing. So we look for the bounce to start, we look for the move to begin and then jump on as early as we can in the move. Generally, I'll look for 2 to 4, maybe 5 setups each day, but I only want to trade A quality setups. If they aren't the best quality setup, for me, the risk just isn't worth it. And this right here is a good example of what our gap scan looks like pretty much every single day. We've got the stocks here, we've got the percentage of the gap, we've got the amount of volume, the number of days from earnings, the float, stock twits, relative social mentions, and all of this stuff I can look at without even looking at the chart and start to get a sense of whether or not this is a stock I would want to trade. Looking at the float is a good way to start, the percentage of the gap, and the volume. Choosing the best stocks each day, this is something that does take practice. It will take some time to watch the gap scanner and recognize which types of stocks move the fastest, which ones are weaker. But this strategy works because we're doing the same thing that thousands and thousands of other traders are doing. We're looking at today's biggest gainers or biggest losers, because those are the stocks that are going to be the most volatile. Right? Day traders profit on volatility. The market needs to be moving. If the market's not moving, we're not going to make money. So we look for volatile markets, and of course we look for the most volatile stocks in volatile markets because that's going to be the biggest opportunity for potential profits. And that's why we go to the gap scanner. We're doing the same thing thousands of other traders are doing. What I'm talking about here is just a unified strategy. It's an approach of how to tackle these big movers to generate and harness their potential and to generate the most profit that you possibly can. So I'm going to usually look for the most obvious gapper because that's the one that everyone's going to be watching. I call it like the new jungle gym on the playground. Everyone's excited. Everyone wants a piece of it. Tomorrow it'll be a new stock, but today this is the one that's in play. So as a momentum day trader, we're following the volume and the volatility around the market. That means we don't trade the same stocks every single day. We have to travel and find whatever's moving on any given day. When I'm looking at pre-market flags, what I want to see is some nice consolidation, and this really is a flag. I mean, you've got the flag pull up, the sideways consolidation between 18 and 19, kind of right in that area. And this for me is just a great looking setup. It's solid. This is a flag that if we saw this during regular market hours, we would be interested in trading it. So when we see this pre-market, we know as soon as the bell rings, the opportunity is to buy for the break of this flag. A bad pre-market flag, in contrast, is going to be a flag or pre-market action where we have a gap up and then we sell off the gap. And we see this a lot, where stocks gap up and then they just kind of fade. This is the type of thing that I'm really not interested in trading. I'm almost never going to focus on these types of stocks. I'm going to instead just prioritize them down the list and move on to stocks that have better pre-market flags. Again, this is a bad pre-market flag, not because it's sold off, but because it already squeezed up so much pre-market, from 260 all the way to 358. So in this case, almost the entire move was pre-market, and the problem with that is we now don't have a very good opportunity to trade this once the bell rings because it's already moved up too much. We want to see stocks that are moving and have potential to move higher, but if they've already had a huge move, then we're just going to feel like we're chasing. And you can see what happens. The bell rings, we do get a squeeze, about 20-30 cent squeeze, and then a hard rejection. So these end up often being targets for short sellers. And then, of course, as we're looking at the intraday and the pre-market chart, this is all in the context of the stock's daily chart. And this is a stock here that's gapping up, and it's approaching its 200-day moving average right here. So this is, for me, is going to be overhead resistance right here around 344. So if we're gapping up to like 330, I'm going to think that, look, we've got this moving average coming right down on top of us. That's a problem. Until we get over that level, we're going to have an issue wanting to be long this name. This is another just bad daily chart. This is a stock that if it gaps up, it's gapping up into the resistance of these moving averages, the 200, the 50, the 20, and the 9. These are all exponential moving averages. So for me, this is just an ugly daily chart, and even if the pre-market flag looked nice, it's just generally not going to be something I would go for unless the catalyst was just absolutely outstanding. And on that note, there are times where a really good catalyst can override a bad daily chart. And we do see that fairly often. So that's something to be mindful of, but it doesn't discount the fact that a good daily chart is always going to be better. All right, so how do you trade the gap and go strategy? When the bell rings at 9:30, my orders that are already prepared, they're ready to go. I'm ready to press the buy button. So I have a couple options. I can base entries on pre-market price action, or I can wait for some of these stocks to hit my high-day momentum scanners and then jump in on the first pullback. Now, remember, every single trade that we take has to have a sustainable level of risk versus the profit target. So I'm going to use a 2-to-1 profit-loss ratio. That means I'm going to risk 10 cents to make 20 cents, or risk $100 to make $200. That's what I'm always going to use for all of my trades. This right here, this is just my simple level 2 window, and what I'm able to do here is I can click on the ask, I can type in the share size, I can type in the price, and then all I have to do is press this buy button. And I can prepare 4 of these or 8 of these for my top favorite gappers each day, and then all I have to do is come over here and click the buy button when the market opens. So I don't have to start fumbling around, typing orders, going through order entry confirmation windows. With these platforms, direct access platforms, it's extremely quick. And this is important because the markets, during peak volatility, which is usually the first 30 minutes, they can move up very quickly and move down very quickly. That means you need to be able to react and move fast. So traders that have hotkeys, that have direct access routing, they're going to be at an advantage. And every little bit helps. So having that advantage is important. As a gap and go trader, there are 5 types of setups that we're going to look at. 1, the opening 1-minute breakout. So opening range breakout on the 1-minute chart. 2, the break of pre-market highs. 3, the first pullback. 4, red to green moves. And 5, 1-minute micro pullbacks. Okay, again, on these trades, I'm going to have a 20-cent hard stop at all times. Profit targets, usually 20 to 40 cents. So still within the 2-to-1 profit-loss ratio. But if you're scaling out and you end up only getting a 1.5 to 1 profit-loss ratio, your break-even is still right around 50%, including commissions, which is really good because that means you don't have to be right 70 or 80% of the time just to break even, which is true with some of the other strategies that some folks will trade. So we want to set that bar low to make it easy for you to succeed. Now here's a good example of the 1-minute opening range breakout. You can see right here, this is the 1-minute candle with a high of 269 and a low of 235. So as soon as the next candle opens and breaks the high of the first 1-minute candle, I get in with an entry of 269 and a stop either at the low or with that 20-cent hard stop. In this case, we go from 269 up to a high of 558, which is a big squeeze right out of the gates. This is a stock that was fairly predictable that we would have that really nice move. Okay, so this strategy for the 1-minute opening range breakout, really only trade this, the first 30 minutes and generally the first 5 minutes is going to be best. We want to see these stocks open, maybe pause for a moment, giving us this 1-minute candle, and then, really take off and start to squeeze. Number 2, buying pre-market highs on the 1-minute chart. So in this case here, we've got CDTI with a pre-market high of 251. As soon as 251 breaks, we go up to 340. So the entry there, break of pre-market highs, that's a strong entry because that's when we're getting a fresh breakout. We're making new highs versus pre-market, showing continuation and some big strength. Note that, again, peak volume in the first 5, 10, 15 minutes, and then decreasing volume as we go further away from the open. Number 3, The first pullback, this can be applied both on the 1-minute chart and on the 5-minute chart. The first and second pullbacks are almost always bought up when you have a strong momentum stock. And this can represent the transition between gap and go trading and just plain old momentum trading. Momentum trading is a strategy that works at all times of the day, trading stocks that are strong. And we're talking about the stocks here that are gapping up, and the gap is the catalyst for that momentum, which is one of my favorite strategies. But once the gappers are done, then we move into just regular old momentum trading. Now, learning to read the scanners is going to be important because a lot of times stocks that are spiking up based on being gappers are going to show up on this high-a-day momentum scanner. And notice the yellow alerts. Massive volume with a low float. These are the stocks that have the potential to make that really big move, which is why we scan for them. And you can see right here, this is a stock, first and second pullback. This is a little further away from the open, but the setup and the pattern is still the same. You get the first squeeze out of the gates, the pullback, and now we're switching in just to regular momentum. The first pullback here in the form of a bull flag, the second pullback here also in the form of a bull flag. We have this stock, did a little red to green move, dipped down, squeezed up, first pullback is bought up, second pullback is bought up. All right, number 4, the red to green move. So this is not uncommon, and actually this is a strategy or an entry setup that's pretty nice. Basically what happens is we have a stock that's already gapping up a lot, and then it dips down a little bit as soon as the bell rings. This happens because, let's face it, the stock is extended. We dip down, but that's just people taking profit who are holding, say, from the night before. And then as we squeeze back up, the first candle to make a new high, right here, for instance, over 320, you can get that big move. And in this case, we went from 320 up to 360, a momentary pullback. This is where new traders came in, more volume comes in, and now a squeeze up to 460, a high of 460. That's a great move. In that move right there, you have the potential to make your entire daily goal, $1,000 easily. So being a successful trader is not about trading 10, 20, 30 times a day. It's about being calculated, taking the best quality setups that offer the highest percentage of success, and then you have the confidence to be the most aggressive on those setups. And that's the exact reason that I'm up over $30,000 this month, is because I've been aggressive on the best setups. I don't trade a lot. I usually only trade 3 to 5 times a day, rarely more than that. But that's enough to make really good income as long as you understand how to find these home run setups. Now, one of the ideal gap and go red to green moves will be when we dip down enough to turn on short sale restriction and then surge back up, because now we've got short sale restriction on for the rest of the day, which fuels the squeeze because traders who want to short can't short with a market order. They have to short on the uptick. So that can give us some added fuel. And then number 5 is the micro pullback. So this is trading on the 1-minute chart. This is basically what we do when we see a stock hit the high-day Momo scanner in yellow. It's low float, massive volume, and we want to jump in. We look for a micro pullback, just a momentary pullback. So that can take the form here where you've got a 1-minute candle that's just a little bit red, and then the next one to go high is your entry. Or sometimes it takes the form of the first candle just to dip down here for a second, showing that lower wick, and then squeeze up. This entry here, where you buy simply as this candle breaks the previous high, is the riskiest, and is only something I would do if this also lines up with maybe a $0.50 or a whole dollar, knowing that breakouts over those critical mental levels are some of the strongest. All right, gap and go exit indicators. So I will begin to sell if I see heavy resistance on the level 2 in the form of a big seller. I'll just bail out on the bid. If I stop seeing buying and all I see on the time and sales is red selling, I'll bail out on the bid. 3, if my first profit target has been touched, I will sell half on the ask, selling into strength. So if I'm up 20, 30 cents, half on the ask. Second and third profit targets getting hit, again, selling on the ask. Now, with my entry on the 5-minute chart, I will typically hold that last position until the first red candle forms on the 5-minute chart. So that means keeping that last little piece as long as possible until the momentum starts to shift. Now, the breakout or bailout mentality, this is super important. This is basically when you look at a stock and you say, this has to go immediately or I'm getting out. So when a stock starts to squeeze, you get in at what you think is the apex point. If it just sits there and goes sideways, then you are wrong, and that's okay. But it's always better to bail out, break even or for a very small loss than hold and just let it go against you. So for me, I call this the breakout or bailout mentality. It either has to work or I'm out of the trade. All right, and now we're going to look at a couple of case studies. So examples of trades that we've taken. This was OHGI. It was on the scanner as a gapper, 14 million share float, gapping up 38,000 shares of volume. We had a headline on it, which is good, right? So we do a little research, market watch, we see we've got a headline, that's fine. Right out of the gates from 236 up to 582 for a quick 100% intraday move in less than 20 minutes. That right there is enough to make your weekly goal. This gave us a 1 minute pullback right here before moving up and then consolidating and then for the next leg up. CDTI, 327,000 shares of volume, a 13 million share float, gapping up 16% on a headline. Okay, so squeezing up, we've got the low float. This is what we like to see. Pre-market flag, nice sideways consolidation. The bell rings, and then you get that squeeze up to 340. Now on this one, again, we got a 1 minute opening range breakout. It opened, we got this sideways, and then we got in looking for the break here of that 1 minute range and in anticipation of the break of the $0.50, which is 250. Here's another one, BLFS. This one a little further down on the scan, only 12,000 shares of volume, 5.97 million share float. There was a headline on it, but the problem was the pre-market flag wasn't that clean. So in this case, I was a little unsure of whether this one was really going to be worth trading. But it started hitting that high-day Momo scanner just as after the bell rang at 9:31. So once I saw that, I said, okay, I'm going to get in for a micro pullback. My entry right here at 250, and then look at that squeeze up to $4.44, making 2 points on a $2 stock. I mean, that is ridiculous, but we keep seeing this again and again and again. The market can be irrationally strong, and we don't want to stand in its way. I've always felt that there's a much stronger long bias than a short bias in the market. Is evident by the fact that we have a short sale restriction, meaning that we can't market into stocks that are down more than 10%. There's no such thing as a long buy restriction. You've got stocks up 1,000% and they can keep running. This is just sort of the way the market is. Traders have a long bias for the most part, especially new retail traders, and so I focus on trading that side of the action. Here's JVA, $3,500 in 20 minutes, an entry at 431 with a move up to 615. Again, almost 2 points. This was on the high-day Momo scanner, had breaking news. I think it was earnings. There was a headline out on it. The headline is what caused the gap. So obviously I can't put stocks on the high-day Momo scanner. I don't cause the news, but I respond to it. All right, this is the one, big squeeze here from $4 up to 510, gap and go, nice clean move. We've got this one here, AXTI, a little bit of a red to green move. We had the pre-market high of $3. We dipped down for a moment and then squeeze up from 3 up to 380. 5,000 shares, that's a quick $2,500, and then your work is done. BSI, this is another one. In this case, we did a poll in our chat room and we found that 90% of the traders that took this trade made money. So again, this is not something that works just for me or that I'm trading in a bubble. This is something that works for thousands of our students. In this case, on this particular day, there were 138 students that took the trade, which is great. We have over 2,000 students in our community who are trading these same setups every single day. And they apply them to stocks that they're comfortable trading. So some students trade stocks like Tesla and Facebook. It's not to say you can't. You certainly can. But I focus on the account building stocks because so many of our students are in the position of having a small account and wanting to build it. That's where I was, when I was trying to learn how to trade. How to find a way to use $25,000 to make $1,000 a week. You've got to focus on the big movers, and that's what we do. Here's another one. This was INVT, pre-market high of 217, a squeeze up to 350. So all in here, there are lots of momentum strategies that we can apply to get these entries on these pullbacks and on these dips. And that's something that we do pretty much every single day. We trade the first move and then the second move. Here's another one, AKAO from 369 up to 608. Are you kidding me? How does this keep happening? Again and again and again. 72% of our students are profitable on this name. ATV, this is a former runner. It's a stock that, ran 10, 12 points in one day not that long ago. So this is a stock that people look at knowing it has that home run potential. Here's PAC-B. This is a one that gave us a little bit of a red to green move. It's a bit of a more volatile name. It's not my absolute favorite, but it was worth a trade, and we got a nice move here from the 440s on the red to green move. First candle to make a new high, stop is at the low, and then that move up towards 490 with a $5 target. CLRB, another red to green move here. We've got the dip down, the first candle to make the new high over 320, the push up through 440, 450, and 460. So this is just to show you that these stocks, the small caps, right, the stocks under $10 with a low float, when they have a catalyst, they like to make big moves. This is a strategy that works really well for day trading the markets. It's not an investing strategy. You don't buy stocks that just gapped up, 15% and plan to hold them for 2 to 3 weeks. These are trades. We get in, we get out, we book our profits, we walk away. Yesterday, another fantastic day, $3,600 in profits. Last Monday, $1,300. Let's see, the Monday before that, $3,815. Biggest green day of the month for me right now is $4,678 trading momentum. And that's what we do at Warrior Trading. You guys, we'd love to have you check us out, warriortrading.com. I'm a full-time trader, but I also run the chat room. So every single day, 9:30 till 11:30 noon, I'm in the chat room teaching people how to trade, showing off the strategies that I've used to make a living in the market. I've got my screen share, I've got all my scanners, and then of course from 4 to 5 p.m. in the afternoons, I'm teaching in our day trading and swing trading courses and working with students. We do mentorship programs, and our goal really is to help you speed up the learning curve. As soon as I started to generate some consistency in the market, I started to document everything that I had done to lead to where I was at that point, which was moderate success. And I kept documenting all the changes and all the decisions I made, and those eventually became the strategies and the framework for the trading courses that we teach. It doesn't need to take 18 months or 24 months before you can be a profitable trader. You don't have to take that same bumpy road that I took. I struggled for so long, feeling so frustrated by the market, but the reality is that all of that could have been saved if I had found a really good training program so I could focus on education. Trying to teach yourself some of these things all on your own, it doesn't make sense. If you want to learn how to tune up an engine, you need to get some education before you pull the headers off the Porsche. I mean, you just don't do that not knowing anything about cars. Unfortunately, so many traders jump into the market and start trading with real money, with live trading accounts, and zero experience. And that right there is the exact reason why 90% of traders fail. We are in a very competitive market. Not everyone will be profitable, not everyone will succeed, but you can do yourself a favor by focusing on your education. So whether you join us now, you join us later down the road, we'd love to have you hang out. We do these trading courses. All of these classes are available streaming live. We just finished up our live day trading class. We're doing swing trading classes this week. You can check us out anytime you want. You can see the curriculum here for the day trading course. 15 chapters of content, about an hour and a half to 2 hours for each chapter, running you through everything that I know about the market. This is the culmination for me of years of studying, years of hard work to develop these classes. And as I've been developing as a trader, I've also been developing as a teacher. One of the reasons that I like to think that I'm a good teacher is because I really, really struggled to learn how to trade. This isn't something that came naturally. Sometimes things that come naturally are not very easy to teach because you don't exactly know why you're good at it, right? Like you may be, I'm for instance pretty darn good at riding a bicycle, and I like to ride my bicycle. I can ride my bicycle sitting on the handlebars, pedaling backwards, and it's just something I like to do. But I can't really teach that to somebody because I don't know why I'm good at it. I just have good balance, and it's fun for me. But trading is something that was really, really hard, and so I know all of the hurdles that I had to cross before I was finally able to achieve success. So I'm able to walk you through all of those various points in your educational process so you can hopefully find the learning curve to be a little bit easier, a little bit quicker, so you can get on to trading successfully a little bit sooner. Now, you can see here we have a few specials for everyone here today. We've got our Warrior Pro trading course, which is $27.99 versus $39.99, coupon code Warrior30. But I'd really encourage you just to join the chat room. You don't have to jump into a big trading course right now. Just join the chat room, $49 for 1 month. Use coupon code CHAT100. See if you like the way we trade. And then if you do, you can look into joining one of our classes, next month or in a couple weeks. I want you to make sure you feel really comfortable being part of the Warrior Trading community. We've been growing month over month since we opened our doors. Like I said, we've got thousands of students in our room, and we work really, really hard to provide the most education possible. So I'd love to have you guys check us out. This today is just sort of a little glimpse into what we do, and if you guys have any questions, you can always email me, ross@warriortrading.com.